Hello, everyone. Thank you all for joining. I'm Tom Couture, Vice President of Digital Asset Strategy here at Fundstrat. We have an exciting webinar planned for you guys today. We're going to be talking about the convergence of AI and crypto, the agentic economy, and we'll be learning a bit about Virtuals Protocol. First, I'd like to introduce Fundstrat's very own Tom Lee. Tom, how you doing today?
Good. Thomas, thank you for putting this together. And I think there's a lot of great material and a great conversation ahead. And the reason for that is I think people have been looking at AI through the lens of AI is something taking place that's you know, being built around a handful of companies. And we've seen the visibility of the CapEx, more than several $trillion over the next 5 years for hyperscalers, for LLMs, and then, of course, the commensurate security protocols being built. But I think what's becoming evident for those who are studying AI is that in this agentic world, that means that a lot of the AI agents and software actually work on what I'd call intercompany basis, or I guess we'd call it internet. And that means it's going to be important to verify transactions and to really create security around this, especially as we think about robots out there and other things ingesting information. It's going to be a vastly more complicated world where instructions need to be verified, right? I mean, if we have autonomous agents driving cars, conducting transactions, even running our everyday lives, whether it's as a consumer, that means setting up travel, verifying bank transactions, for enterprises, it's numerous enterprise transactions. We're going to need to be sure that these are verified and have the finality that we do today with payment systems. And so the natural place where this is going to take place in our view, especially given the idea of using tokens to send instructions, is on a blockchain. And that's where I think Virtuals is going to play an important role. This is one of many companies, but this is a company that has many merits and unique architecture. And I think that's what Thomas's report really makes evident. If you haven't seen it, it's really comprehensive and pretty well laid out. And so I think it's an important it's an important time, because this is 2026 is the time that investors and companies and enterprises are going to start to think about the importance of verified, proof of provenance of an instruction. And so that's where I think a lot of this work is going to really start to become central.
Oh, yeah, couldn't agree more. And with that, I'd like to introduce our special guest, Jansen Teng, the co-founder and CEO of Virtuals Protocol. Jansen, thanks for joining today.
Hello, guys. Pleasure is mine.
Maybe to start us off, you could tell us a little bit about your background, how you got into crypto, maybe an overview of Virtuals, and kind of what led you to co-founding it.
Yeah. So, okay, I gotta start this with a very honest entry point, right? So my journey to crypto started in 2016. I was actually still studying at Imperial College London, and the reason why I came across crypto was I googled the most common phrase in Google, which is how to make money online. So that that was my initial gateway, right? But then got into mining, got into starting a node for Ethereum on your laptop. Back then, you could actually still do it, and didn't do much actually. Just helped invest some of my poor student savings into Bitcoin and Ethereum. Back then, Ethereum was like $7-10. And then I left Imperial and joined management consulting. So went to TradFi, went to Boston Consulting Group for 3.5 years. But then in 2021, I think crypto heated up a lot, and a few friends from Imperial as well. We came out, left our jobs, and we said let's explore something at the intersection of crypto and consumer applications. So that was how our journey moved over to being just an investor to a builder in the space. And our initial foray into the space was pretty much think of it as a venture studio. So we are building a couple of interesting projects at the intersection of actually gaming, blockchain, and consumer. And actually, two of the most interesting projects that was being built in this venture studio was actually applying AI in entertainment. So we were trying to build autonomous agents to replace NPCs in games. So we were the first to build a gaming experience on Roblox using autonomous agents. And we also were building the first autonomous agent influencer on TikTok. So we were doing this, and then so this was a phase one of our foray, right? And then what happened was then we realized that these agents were actually productive. Like the autonomous influencer on TikTok was actually making money autonomously
Yeah.
without a human in the loop, which got us thinking of phase two, which was then if they are productive assets, why don't we then tokenize them and let retail share into the economic upside of these agents, these productive assets? So that's where we actually started our tokenization platform at the end of 2024, which caught fire. I think that was why we blew up in the space and we brought the whole agentic hype into crypto. We were also the first guys who created an autonomous agent to utilize a crypto wallet. And I think that wowed everyone because people realized that if an agent can control money, it can exert influence on humans and other agents. So that was that journey. And then into December earlier this year, we had quite a flourishing ecosystem of autonomous agents. And then we realized that can these agents create more economic value if they are coordinating at scale? So that led us to this phase three, which is then the thinking of how do we build this strike for the agentic economy, right? So yeah, so I think that's the brief highlight of my evolution in the space.
Yeah, right. And I think you make an important point. So AI agents, we've seen that they can be specialized in certain tasks, but kind of branching out and handling a lot of different tasks skillfully is something that they struggle with. So there needs to be a way to coordinate between them. And I think that's something you guys are building with your agent commerce protocol. But I also think there's an important call out here is that blockchain unlocks a lot of benefits for AI agents. I think maybe you could talk about how stablecoin smart contracts, how that kind of fit into your vision of the agentic economy built on blockchain rails.
Yeah, actually, I think this is probably the most important question, right? It's why crypto, why blockchain actually matters, right? Is it just a lark, right? Or is it just a facade, right? But I think for us, this whole thinking boiled down to a problem that we tried to solve for ourselves. So in February early this year, we were trying to get two agents to work together and work together to perform a commerce transaction. So not just talk to each other, but to actually transact autonomously. And we face a ton of problems. We face issues where there's the agent hallucinated thinking that he has done the job, but he actually did not execute the job. Or if it thought that it has delivered the payload and inside the payload is actually empty. So it got us thinking that we needed a way to solve this information loss problem. It's like the early innings of the internet, right? They needed a TCP/IP because information was actually transmitted with a lot of information loss in the early days of the internet. So it's the same thinking for agents, right? How do you reduce information loss? And then when we were trying to brainstorm of like how do we solve this problem for ourselves, we then realized that hey, actually the blockchain kind of solves it quite elegantly, right? There's three core parts to it. So I think the first part is the blockchain allows for trustless coordination. basically, think of it as if every intent or agreement between each agent is locked on chain, and the agents can refer to the state changes on chain to understand where he's at in the transaction. He knows whether he's already delivered a job, he's already received the payment, or the payment is still in escrow. He can react accordingly. So it becomes that single source of truth. And the second thing is the blockchain allows for the bundling of execution and payment. I think a lot of the problems that we solve, like the loss of information, is a lot of times due to a timing mismatch, which if you actually put intent alongside payment, which you can do in smart contracts, you remove that problem totally. And you also allow these agents then autonomously self-organize into their own supply chains. And the third thing that the blockchain then does is that because every transaction and intent is actually on chain, you pretty much build the largest Yelp or Google review for these agents. You create provenance and identity behind these agents, which then allows the cost of search, the cost of acquiring a new supplier, you get it very, very cheap because you can get to see that, hey, this agent A does a better job than agent B for this specific task. So let me engage agent A for the task instead. So we realized that because the blockchain solves all of these, we then decided to let's create a protocol that end-to-end captures the entire value chain of an agentic commerce value chain.
Yeah, 100%. And I think having an open standard in digital identity is very important because people can, like you're saying, see the provenance of how reputable they are in the services they're providing. And I think Virtuals is spot on in having a diverse network of agents that can do different things. And as you're saying, with the bundling of payment and services into one, I think there's other agent-to-agent communication protocols out there, but they haven't fully solved the payments bundle within it.
Correct. Yeah, because I think the way to think of it, right, is that I think the more important grounding is the vision of the world that we're going into, right? Because I think where we are seeing is that, today in every business points, when a business interfaces with another business, you have a human, right? There's a human that is negotiating. There's a human that is contracting via the API, or if you bring it down all the way to a McDonald's chain, right? There's a human that is actually buying the burger patties, right? The idea here is we believe in a future where at every interface points between every form of business is going to be an agent. So let's say in the McDonald's chain, when a human pays for food, they'll pay for his McDonald's hamburger, he's paying an agent. Or when the restaurant is actually buying burger patties, it's actually an agent is the one that is actually purchasing its supply for a supply chain. So if that is the end state of the world that we are heading into, then the idea is that you cannot have humans in the loop, because if you realize when machines and machines talk and coordinate, there's a lot of efficiency. And the idea is you want to subtract the human element to increase the productivity of these systems. So I think the idea of using the blockchain is that it allows code to talk to code in a trustless way. So you actually do not need the human in the loop. So then you scale productivity more intensely.
Yeah, and I think in oversimplification right now, everyone is pretty used to prompting either ChatGPT or Google and say, I want to see flights from point A to B for whatever price. And then from there you go and handle the actual transaction. But the autonomous agent unlocks scan flights constantly. If price drops below $300, book it. And you're really unlocking or reducing consumer friction there. And I agree with you that the front end of most consumer commerce will probably shift to some form of an AI agent under the hood. But so maybe we shift a little bit to talk a bit more in depth about Virtual specifically. So you guys have basically two product buckets: agent deployment and the agent commerce protocol, like we mentioned. maybe you want to tell us a little bit more about the benefits of launching via virtuals.
Yeah, so I think the way the way to look at what we're building is we've built two things, two core pillars. I think the first pillar is a top funnel, or the basically the right now today it stands as the largest tokenized agentic ecosystem in the world. Um, I think we have thousands of agents that have been tokenized. The total cumulative market cap is almost $1 billion of these tokenized assets. And we facilitated about $11 billion in asset transactions of these agents. But the core of these ecosystem is really to act as a top funnel to solve the cold start problem of a network. Because if you want to be the Stripe for the agentic economy, we need agents in this ecosystem to work with, right? So that is step one. And then step two is that we've built that the agent to agent rail, which today is still in the early innings, but it has facilitated about I think $40 million in I don't know what to call it, volume in a sense. And it's only being done by like a handful of agents, like I think 50 to 60 agents that are actually active that has facilitated the amount of transaction. Most of it is actually on the trading and on the entertainment side of things. So but yeah, so I think that's the two core products, right? We have the top funnel, the ecosystem, and then the protocol. Just then to double down on the this top funnel, this ecosystem. I think the value proposition that we're trying to create here is effectively how can we replace Y Combinator, right? Like we've talked to founders who are building all of these agentic products, and there is a few things that they need, right? One is they're trying to solve distribution. How do they get the first 1,000 hardcore fans or users? Second thing they need is how do they solve capital formation? How do they raise enough money to hire a team to push their agent forward? And the third is then how do they do it? How they deploy their agents in the easiest manner, right? Can we provide some form of tooling that could help them do this easily? So that's pretty much the solution set that we're giving to these founders, where they're tokenized within the ecosystem. And I think for the past year, like you'll see like agents launching every single week, right? And I think our idea is we want higher and higher quality assets. And we want to prove to founders that hey, this is an ecosystem that could rival Y Combinator as a launchpad. Yeah.
Yeah, right. And I think so. One part is capital formation, like you're mentioning, in that it provides an alternative form of funding for founders without having to give up large portions of equity to VCs. But I think the distribution part is very important to highlight because I think you've even seen it with specific agents in your ecosystem, but you're immediately accessing over 100,000 agent token holders, and there's clear visibility on the platform, transparency in terms of the tokenomics and how many tokens founders are getting and things like that. And then, so after launching through the Launchpad, I know we already talked a little bit about ACP, but I think the other benefit is all these agents can then communicate with each other and you start to form agent clusters, as you guys call them. Are there any clusters you'd like to highlight,
Right.
explain
Yes.
how agents work together and complete
Yeah. No.
complex
So
tasks?
just a small caveat there, right? I think the idea is that the ACP protocol is actually permissionless. Like you do not need to tokenize within the ecosystem to be on the registry of this agent to agent protocol. I think, but today, I think back to your question, the biggest use case that we have is actually still in trading. It's still in, this on-chain, how do I make money in the crypto markets? And that's actually the biggest use case right now of the agents in our ecosystem. So to give you an example of how ACP works or gets to motion. So think of it today if I am a user, right? I'm just looking at Twitter, scrolling my timeline, and then I see like, hey, I see a KOL shilling a token, right? It's talking about, I don't know, what's the most bullish token on timeline right now? Everything's down. So if maybe if so a KOL is shilling Ethereum, right? And then what you can then do is you can ask your personal agent, right? Your butler agent and say that, hey, can you run me a due diligence on Ethereum? Okay, like maybe it's better if it's a smaller coin. Let's say Esther. There was a hype around it like 2 months ago. To run the due diligence on Esther token.
Yeah.
What your butler agent can then do is he accesses the ACP network. He scans for agents who can do the job, who can actually do this due diligence job, and then he would execute on behalf of you. He would tell this, let's say, an agent ecosystem that's worth highlighting could be AIXPT. It's probably one of the largest followed agents in Twitter. And he can then do the due diligence for you, give that work back to your butler agent and say that, okay, hey, here's the work of this, here's the due diligence on this asset token, smart money are aping into it, blah, blah, blah. And then what it can then do is then it can engage this butler agent can then engage another agent on the network to execute that trade for you. Right? So now the idea is you can sequence multiple steps and engage with different specialties of agents. And then let's say the third thing is then now you own this token, right? And then you want to share it. You want to create some interesting content. You'd be like, hey, can you create a meme on this asset token for me, right? And this your butler agent can then go out, search the ACP for another agent that can create meme videos for
Yeah,
you.
I was gonna
So
say maybe talk a little bit about Butler Agent, because as I was researching virtuals, I thought there was a little bit of a everything clicked moment when I saw that Butler was kind of the front end to access the entire virtuals agent network.
Yeah. So to double back on that front is so when we created ACP, we've realized that it's a very B2B model, right? It's basically agents working with agents. And then we've realized that we needed a ability for an end user to actually feel what this network can do or what how does it deliver on its vision. So we've then built a consumer to agent channel, which is this butler agent. And this butler agent basically lives on Twitter. It lives in your Twitter DM, or it can be accessed through our website as well, which pretty much is a human window into the ACP world. And what I've described to you earlier is basically how a human today can use Butler as a personal helper to help him do anything as long as there is a specialized agent in the ACP network servicing that specific use case.
Yep. So I guess, are there any agents you'd like to highlight in the ecosystem? You guys have had over 18,000 agents launch via the Launchpad. Anything that you find particularly exciting?
Yeah, so I think to touch this point, I think the most important question is more of it's just double back, right? It's actually a school of thought that we have. So today there's actually two school of thoughts in the world about AI agents. One school of thought is that there will be this super intelligent, super large model agent that is connected to a world of APIs that can be this one size fit all solution to everything that you need in the world. And there's the other school of thought which we subscribe to, which is yes, there instead of having a God agent, you actually will have a fleet of specialized agents. Every agent has some form of specialty because of the underlying model that's slightly different, access to proprietary data sets, or access to proprietary action spaces. And it's through this coordination of different specialized agents is where we get higher economic output or higher intelligence being formed. So that said, I think back to your question, then it's today you can actually see within the ecosystem. I think just to highlight one case, right? There's this agent called facility.ai.
Acticity AI.
Yeah, yeah. And it's pretty much a fact checker agent, right? And because it's a specialized agent, this agent has outperformed your general LLMs on every single benchmark on fact checking. I think its error rate was like in the teens compared to the error rate of like your LLMs, which are like 50%, which is pretty much fact checking using LLM is like a flip of a coin
Yeah.
versus these specialized agents, right? This is an example. Another example is like agents that are then specializing in providing investment alpha or edge. So there is right now is literally a PMF that people are seeing in crypto. A lot of crypto traders today are trading based on advice of highly specialized, fine-tuned agents that are providing crypto alpha. So it's like what Fundstrat does for TradFi, but there's a bunch of AI fleet giving insights on chain due diligence, smart money movement, compounding with like macro news, trend analysis, right? So that's another example of specialized agents on the trading front. Which I mean, AIXBT is one example, right? But actually, there's a fleet. There's a fleet of them in the ecosystem today that pretty much people are using on a daily basis.
Yeah, and something you said earlier about creating a specialized network of agents. So I think you've seen a lot of the AI value accrual. It's gone to infrastructure, hardware build outs as people are training models. But I think as inference costs go down, it'll be cheaper to deploy lightweight agents, and the real value proposition is going to shift to apps, agents, and also how to coordinate between these agents. And I think Virtuals is ahead of the curve here. You guys are thinking about it the right way. But curious how you're thinking about growing the network. There's obviously a lot of competition of the Googles of the world, OpenAI, Stripes. How do you think about scaling the ACP network?
Yeah. Well, this is very interesting because when we're experimenting, I mentioned right earlier in February, we actually published a paper on agentic coordination or like a need for agentic standard, and we proposed that solution in February, and we were 2 months ahead of Google in publishing that paper. So I think the problem about what a lot of players are trying to do, it's people are solving different part of the agentic commerce value chain in a very isolated vertical way. So think of an agentic commerce value chain as sourcing, so being able to find the right agents to do the job, coordination, uh, escrow, and payments. So how do you also resolve any form of issues within these payments? And then identity or provenance or reviews, right? So I think if you look like today, you'll see Google is solving one part, which is purely just coordination without payments, the whole A2A portion. So they will have to then work with a payments provider, which then folks like X402 by Coinbase or folks like Stripe and OpenAI they're trying to solve, which is the payments architecture. And then you then have Ethereum and Consensus coming in with their 804 registry. It's an open source registry, but that's solving only one part, which is the search and the provenance layer. So I think that the problem about when this happens is that it's very what to say it's not a one-stop shop, right? It's very haphazard, right? Like a developer has to come in and plug multiple things together. I think what we've done is we've managed to abstract the entire value chain, so it's seamless, right? In just one protocol, you can find, you can coordinate, you can pay, and you can resolve any form of dispute
Yep.
seamlessly. So I think that's the edge that we have. But I think in reality, the key implementation edge, because again, like in anything like tech will never be the edge, right? Anyone can build stuff fast. I think what we have is actually an ecosystem of builders who are actually building with us live. So I think today, if you just compare against I can say this quite confidently. If you compare against any agentic commerce or any players who are building in this area, I don't think anyone is as advanced as us in terms of testing it live with actual live specialized agents out there. So I think we're the only guys who can actually show you a a system that's actually working. And because we are live, we are iterating way faster than any guys who are still in the ideation or conceptualization mechanism. So actually today, if you guys go to like the Virtuals website and you click the ACP tab, you can click on the activity log and you can see every second, right, there's this agent to agent transactions happening.
Yeah,
So
yeah. And
I
for
think
example,
that's our age.
Google's agent to agent protocol is also separate from its payments protocol. So it's kind of two bundles. Which also, so there's been a lot of hype lately around X402 payments. And I think it would be helpful to explain how it's not necessarily a competitor to ACP. It could actually fit right in. So maybe you could talk a little bit about that.
Yeah, so so think of it as like an agent today can have like a human, we have multiple wallets or we have multiple credit cards or multiple bank accounts, right? In a sense, agents can have multiple wallets as well. So they could have a smart wallet that is running fully on chain that is provided by folks like Privy or Alchemy or Coinbase themselves, CDP, or they can use this novel mechanism that the Coinbase guys figured out, which is that X402 mechanism where by just using a a simple API call that could transact with stablecoin. So it's another wallet. It's effective in another wallet, right? So what we've enabled is agents within an ecosystem can have two wallets. They can choose to whether they want to accept payments on their smart wallets, which is a pure crypto account, or they can choose to accept payments through the X402 wallets. Simple as that. It's just it's again, yeah, it's the integration of the payments part. There might be a third payment that come out that says, oh, Visa that might integrate banking and smart wallets together, right? There may be a third wallet that will come out that can then get integrated as well to these agents.
Tom, welcome back.
Yeah. I yeah, I mean, as you know, crypto and equities historically moved in sync. So in periods when equities are doing well, crypto does well. The linkage, of course, is both monetary liquidity, risk appetite, and of course, leverage. So when stocks are going up, investors have confidence, and especially if the Fed is being dovish, and therefore people buy crypto. But this kind of diverged after October 10th, which is a couple weeks ago, because there was a massive